Mobile home park, RV park, I'd look for deals that are no less than 32 units. And the reason why I would go after those deals is those deals probably are going to be trading for 60 to 100 grand a door. So if it was 100 grand a door on a 32 unit multifamily deal, the price would be 3.2 million. I guarantee you, if you bought one of those deals your first year versus 5 houses, you'd be doing way better with that one deal. And then your next deal would probably be a 64 unit. And then you'd be scaling up fast. Welcome back to another episode of the Real Entrepreneur Podcast. My name is Alex Coffman. Thank you for tuning in today. Today we're going to be talking about different ways some of you guys can get started investing in commercial real estate. I hear it all the time. You know, a lot of you guys y'all are in my DMs on Instagram, and y'all are, every time I talk to somebody, I hear things like, I intend to get up to that point, at some point. I just don't really have the capital for that. Or, well, I thought I'd start out wholesaling. Or, whatever the excuse is as to why you can't jump straight into commercial real estate deals. So today I'm going to be talking about some different ways that you can get started on a good commercial real estate deal without your own capital, without going to get a loan. And we're going to be discussing the types of assets that you should be buying. So if this is your first time watching this, make sure you like, subscribe. All right. So if I was just starting out, here's exactly what I would do. I would be looking for, and I would look for different things depending on where I thought the opportunity was. But I'd be looking for some small retail centers, like 10,000 square foot or less. I'd look for small industrial warehouses, maybe up to like 50,000 square feet. And then I would also be looking for RV parks, mobile home parks, and small multifamily deals, about like 32 units minimum on each of those. So mobile home park, RV park, and multifamily, I'd look for deals that are no less than 32 units. And I'll try and find about 32 unit deals, 30, 40 unit deals. Maybe something in the 20s, but nothing smaller. And the reason why I would go after those deals is those deals, depending on which market you're in, probably are going to be trading for 60 to 100 grand a door. So if it was 100 grand a door on a 32 unit multifamily deal, the price would be 3.2 million, right? Now these deals are typically, here's why these deals are good just in general. Number one, they're way too small for a big player. A big player is not going to go in and buy a 32 unit multifamily deal. So a lot of the qualified, experienced, well-established buyers are not going to be looking at those deals. And they're too big for the person who buys single family rentals. They're not even thinking about buying a 32 unit apartment complex. So it takes away all those people who you'd be competing with to wholesale deals, residential houses. And then it takes away all of the big buyers who are well established and have a lot of capital. They're looking for much bigger deals. So a lot of those people aren't in the buyer pool for these deals. And the buyer pool is really small, number one. So you don't have a ton of competition. And the competition that you do have, it's nothing crazy. I wouldn't consider it, a lot of competition. So you have a good chance of getting these deals because there's not a lot of buyers for them. All right. So number two, a lot of these deals likely are owned by an individual that's mom and pop. So you're not dealing with an institution. You're not dealing with, a huge complex and brokers and, sophisticated property managers and stuff. You can go find these deals that are just owned and managed by mom and pop owners. They probably owned it for a long time. There's a good chance that they don't have any debt on it. They may even own it free and clear. And if you go find one of these sellers with one of these deals that's been mismanaged, the rents aren't where they need to be, there's probably some deferred maintenance in there somewhere, you can negotiate these deals to be very good and on seller finance terms. And so if you go find a deal that meets, that criteria, you can structure a seller finance deal where you're not having to go get a loan from a bank. You're not having to go get your credit checked. You don't have to have a a personal financial statement that shows your net worth of over $5 million, right? You can work directly with the seller, and it's whatever you two agree upon. And here's the cool thing with seller finance is that it's all negotiable. So the down payment's negotiable, interest rate's negotiable, the term is negotiable, the monthly payment is negotiable, the amortization is negotiable. Everything is negotiable. So you might even be able to structure a deal with 0 down. That's a possibility. But you can also structure one with 5% down, 10% down, 15% down. It's whatever you can negotiate. Also, you're not locked into a specific rate at today's market rates. Some of these sellers don't care. They're unaware. They really just don't care a lot of times. And if you can give them the price or whatever is most important to them, price, down payment, etc., and offer them a solution and structure a deal to where your payments make sense with the NOI that's currently in place, while still having capital left over to get your cash on cash return, your cash flow, and to put money into the project that may be needed, then you can really get super, super creative and structure some really cool deals in this space and with these types of sellers. And so in that case, you're not going to the bank. You're not getting your credit check. You're not getting a loan. You're not paying for an appraisal. You're not paying for origination points. You're not having to go out and get all these inspections and everything done. You don't have to go get a phase 1 study. You can avoid a tremendous amount of costs that are associated with getting loans. You can avoid having to qualify for a loan, and you can deal directly with the seller and get a deal done. So I'd recommend that, number 1. Number 2, if you have to, for your down payment, your cash to close, I would highly recommend, especially if you don't have capital, that you start talking to investors and you raise the capital from those investors. All right. You find people who want to invest in real estate, want to get a return. You'll manage the deal. They'll own a percentage of the deal. You'll own a percentage of the deal. You'll manage the entire thing. You'll handle all the tax stuff with your CPA that you're going to hire. And you can do this, with an agreement like this. You don't have to go get, syndication docs that cost $15,000 to find yourself a partner who wants to invest in your deal with you, right? And if you structure a deal, a 32 unit, let's say you're buying it for $3.2 million. Let's say you agree to, put down $500,000. Then you go find 5 people with 100 or a couple people with 250 to be your partners on the deal. And now you are scaled up way higher than if you would have gone out and tried to wholesale a single family house for 10 grand. And you can repeat this over and over and over until you do have a built up investor base, until you do have the personal financial statement to be able to qualify for certain loans, until you do have the capital to be investing in these deals. But that's exactly what I would do. Wholesaling houses, you are absolutely wasting your time. You might make some good money doing it, but nobody gets into real estate to wholesale houses. Everybody wants to own real estate. And myself included, and everybody who's starting off typically starts buying rental properties, one house, duplex, quadplex. These are not good investments for what you're buying real estate for. You're buying real estate for financial freedom, and those will not provide you financial freedom. I guarantee it. Unless you own like 100 of them and you've owned them for, 20 to 30 years. At that point, you're probably starting to experience financial freedom from it. But they don't cash flow initially. They don't cash flow with debt on them. You will gain appreciation if you're buying in a good market, but that's about it. With commercial real estate, you're going to get the cash flow. You're going to get the forced appreciation because you're going to improve the property. You're going to get the tax benefits, and you're going to be able to multiply your investments much, much, much faster with way less headache, by the way. They're easier to manage. Everything is easier with these deals. The houses, the duplexes, the quadplexes, they're a pain in the ass. They don't make any money. And if you're focused on trying to get into the game by wholesaling those, you're just, one of another, 2,000 people who woke up today and decided they wanted to wholesale deals. It takes, not everybody goes out and does what I just mentioned on structuring these seller finance deals on a 32 unit because most people aren't resourceful enough. They're not really in it for the long game. Who knows why they're not doing it. But this is exactly what I would do if I was just starting out. And it's exactly what I'm encouraging people, on Instagram who I talk to do. I hear this way too often, I want to, but I can't. I don't have any money, I don't have the capital. I can't. Quit saying I can't and start thinking about how you can. And I'm only telling you this from personal experience because I've done it all, and we've done it all. Flipped houses, wholesaled houses, bought a bunch of houses, bought duplexes, triplexes, quadplexes, small multifamily, 8 units, 12 units, 17 units. All of these deals suck, and you don't want to buy them. And you can jump straight to a 32 unit very easily. You just need to expand your mind a little bit around it. I know that you might not think that it's possible. You might think that, it's easier said than done. And it is, but, of course it's easier to just say that than to go out and do it. You have to put in some work to go out and do it. But I guarantee you, if you bought one of those deals your first year versus 5 houses, you'd be doing way better with that one deal. And then your next deal would probably be a 64 unit, and then you'd be scaling up fast. All right. And while all your buddies are pouring money into their rental properties, you're sitting there actually collecting some cash flow. On a 32 unit, it's not going to be a ton. You're not going to retire from one 32 unit deal, but I guarantee you'll have more cash flow there than you would on the houses, without a doubt. So I would focus on that. And same thing applies to the retail, the industrial. Drive around your city and look for these smaller retail, mom and pop looking, older industrial warehouse properties that have a for lease sign out front. Call these for lease signs, and you can typically talk to the owner of the property. And a lot of these people, same scenario, probably own them free and clear, own them for a long time. Your competition is much different. You're not dealing with the rental property buyers. The institutions don't want to touch these things. The more sophisticated buyers aren't going to look at them. So you have a unique opportunity in that lane to go attack the smaller commercial deals, whether it is retail, industrial, multifamily, like 32 units. Don't look at an 8-plex. 8-plex is the same thing as a 4-plex. Look at a 32 unit plus. And with RV and mobile home parks, you're going to have more cash flow for sure in the RV and mobile home parks. And I really like this segment, this real estate class. And same concept, except probably even easier to negotiate these deals. The RV mobile home park sellers, even more so, are mom and pop, probably own it free and clear, much easier to structure deals. They know about seller financing, and they'll work deals with you. And so that is what I would focus on, all while building my investor database who I can raise capital from to invest in deals with me. But I would avoid wholesaling. I would avoid flipping houses. I would avoid buying rentals. I would avoid buying duplexes, triplexes, quadplexes. I would never buy an 8-plex. I would go for the slightly bigger deals that are not too big yet. I would structure seller finance terms on these deals, and I would raise capital from just a few people to be my partners on these deals. And you're going to make a lot of money doing this. And there's not many people out there doing it. Number one, because the small guys, they never take the time to learn how to do it. They're always thinking way too small. And then like I said, the institutions or the bigger guys, they're never going to go buy those deals. So that would be my advice. Learn how to do these deals. Spend time educating yourself. Figure out what these properties are in your market. Go speak to the sellers. Learn how to structure them. And if you want my help, come join the One Deal Away bootcamp that we're doing. You have just a few days left to grab your ticket to the One Deal Away bootcamp we're doing August 13th through the 16th. Go to treuniversity.com/1deal and come join me at the bootcamp. If you want me to walk you through, hold your hand, help you find a deal, negotiate a deal, underwrite the deal, analyze it, I'll pick up the phone, call the broker, the seller. I will structure your deal for you. if you bring a deal and the opportunity is there. And then we'll get you to write up the offer. I'll teach you how to do that and send it to lock this deal up. But other than that, I will see you next week. Quit bitching and complaining. Get out there, start taking action, and start making this a reality.